Good morning, traders. It is 8:02 a.m. Chicago time on Tuesday, the 25th of April, 2023. This is episode number 2455. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here we go into the convergent trading pre-market summary sheet this morning. We've kind of been looking at the same summary sheet for weeks now, haven't we? Mild risk off today. We did have a sell-off overnight, and we're kind of holding steady currently. This morning we had GM, Centene, Verizon, ADM, UPS, PepsiCo, Raytheon, 3M. A lot of releases right now. What's governing is the earnings releases, so we're kind of putting a lot of weight on that currently. After the close, we have. Let's see, I sound a little lower than normal. Okay, let's take a look. Vamos a ver. Let's take a look here. You're right. Windows did its thing where it reduced my mic volume. All right, that should be better. Let me turn down my news feeds. After the close, we have Alphabet, Microsoft. We have, I believe, Meta. I thought we had Meta today. I wasn't sure. America Mobile, Chubb, Visa, Texas Instruments, and so on and so forth. This is after the close today, so there's a lot to price in once the cash session is over. Again, the key focus right now is the earnings season. Bank of Japan's Governor Yuda, Bank of Japan sees it as appropriate to maintain YCC and easy monetary policy given current economic, price, and financial developments. Sharp drop in deposits Q1 for the First Republic Bank. That's the thing that drove the market in the overnight session that I can see. I don't see anything else. There is some talk of potential issues with China's growth. So we saw Asia kind of lead the sell-off. But First Republic Bank was the call was just horrible. They have lost a tremendous amount of money. I think it was 190 billion or so. They have massive outflows from customers in their wealth management business, and it's just there's nothing positive about that call. They didn't take any questions, and it is the last of the key banking releases. It was a pretty bad one. The BOE, Bank of Japan, ECB, and SMB, the Swiss National Bank, in consultation with the Fed, have decided to revert frequency of 7-day operations from daily to weekly, effective May 1st, due to improvements in U.S. dollar funding conditions. As far as the calendar is concerned, really, the overnight session had a few releases, nothing really major. We did get the Case-Shiller numbers for homes. Home prices month on month, 0.2, positive 0.2, versus the expected negative 0.7. That's quite a swing. That's a swing of plus 0.9%. It's pretty high. And then year on year, home prices have increased by 0.4% in the month of February versus 0%. So the home market is pretty strong still, despite every macro analyst out there telling us how the home market is just very likely to implode. And I know that that's a slow process because, these are people's homes. People don't sell their homes for a discount or sell at all if they have to buy at expensive prices at much, much higher interest rates. So I expect that the whole housing market will have very, very little action in it, because why would you get out of your home at 2.5% mortgage, 30-year mortgage, versus now, which is what, like 6% or something. and potentially, getting more money for your home, but then also having to pay more for another home in a similar area. This morning we got the consumer confidence number at 10, new home sales as well as Richmond Fed. Dallas Fed Services at 10:30, and then at 1 o'clock we get the 2-year note auction. This is important, $42 billion worth. That's at 1 o'clock. And then after the close, we get the API crude oil stock change at 4:30. And then this evening, we get the inflation rate out of Australia. Looking at the S&P, 185,000 contracts traded in the overnight session. That's pretty much in line with what we consider to be normal. As I said, the market started selling off with the Asian session open, and the inventory is 100% short. We've traded the entire session so far beneath the prior close and settlement. The range is 28.5 points, which is okay. And remember, the mode down here, down below in the ES overnight stats box says 31 points is the mode. It's the most common value. And the point of control is holding at 4140 this morning. So that's the S&P multi-distribution profile, looking a little bit balanced. So here we are. Let's take a look at what the market is doing, what it has done, what it's trying to do, and how good of a job. Simply put, look, I don't need to re-emphasize, but 4,900 or 4,100 to 4,200 still remains the scene of a battle. It's not even a battle. It's kind of like during the American Civil War when both sides were just tired and exhausted, there's no territory gained or lost, and everybody's kind of hunkering down and waiting for the next thing. And to me, is like before the battle at Antietam or something, for you history buffs. But it's just, there's nothing to price in. And so we continue on this same path of, we had a pretty decent run back here. We had our pullback, we had our continuation trade, and then what we have is a potential corrective action, and we're just not seeing any reason to price up or down. Yesterday, for some time now, the 4160 to 4157 area has been important. This played well yesterday. And there's just not much to say here. We've got balance at 4152 or something like that right now, and it's just the market is just holding steady there. So there's no reason to exert. We did push the 35 low from Friday down overnight to 4130, and we've bounced back up, and we're trading at 4140. And so we're, at the prior month's high. We're just sitting sideways. So I know that this is frustrating because you're here to trade, and the action is such that it doesn't give you many opportunities. I know that this is frustrating, but this is just part of the game. There are times when you need to just sit, right? Your job is not to trade all the time as a trader, believe it or not. Your job is not to trade all the time. Your job is to recognize an edge, execute an edge, and follow a process, and you get paid for doing that over a large number of trades, period. You don't get paid for that every single trade. There are trades where you'll lose. You'll take a full stop having recognized an edge and trade it, followed your process with discipline. You might still lose, but over a large number of trades, you're expected to get paid to do that. And if there's nothing there, your job is to do nothing. Just like a soldier, you don't just shoot at emptiness down the field. You need to acquire your targets. Your targets have to be identified, and then you pull the trigger. You get authorization, you pull the trigger. So This is how it works, and this is actually currently the toughest part of trading is what we're experiencing here for the last 2 to 3 weeks. It is really, really hard to come in and have maybe one setup a day. But this is generally the quiet before the storm, and generally, once the market breaks, those who have been around and watching and learning how the market's responding at 41.60, 59, 41.30, 35, really 41.35, 4100, 4200, 4089, 4071. Like just having that map in your head, once the market breaks, you're in a much more prepared position to take advantage of that movement once it happens, okay? So that's where we are. There's not much more I can say here about this. The NQ, same story, just sitting sideways. We've been trading sideways for quite some time. Same thing. Not sure why we would expect it to be any different, but the NQ has been in a range for a while, and it's just sitting at the bottom of that range. We have not given up much in terms of territory away from the most recent high. That's an important thing to note when you look from a weekly or monthly perspective. Here's crude making a nice little bounce off of our 77 area. Remember, we talked about 77 being key in this area. It's been key for months. It's been key for the entire year, the 77. It's really the most important price of the year, $77 for a barrel of oil. And yesterday, we managed, last Thursday, we managed to bounce off of the 77. We took it out by 2 ticks. We consolidated, and then yesterday we opened below, went down to close to the 77, and finished pretty strong. And then today, we're sitting sideways. So what's happening here in crude is we're establishing a micro composite built from the last 3 days, and it's consolidating at these levels. What it's not doing in crude is it's not bouncing from this area. So if I consolidate these together, there you have it. In crude, it's got this kind of sharp-ish profile, and it opened just above, and it has pulled back to the point of control, the profile. It's important to watch how crude treats this area. Does it come back to 78, 76 for the settlement and push through? But what we have here is imbalance a little bit, breaking out of balance, and then it's bouncing again. And the expectation is it's very likely to squeeze down into that 75, 80, or 70, or whatever this high is. I forget what the number is. I'm expecting it to close the gap zone and pull back to the prior point of control in crude. So that's crude. Looking at, come on now, looking at RTY. RTY, same story as before. The RTY is just sitting in a range. The range for the RTY is around 1820 to 27, really, down to 1710, something like that. I'm going to incorporate these overlapping profiles, just tons and tons and tons of overlap. This morning, the Russell's in a gap down, whereas the other products are really opening in range. The Russell really making an aggressive move overnight. The Russell has some pretty decent overhead at 1800, at the 1800 level up here, right up here at 1800. It's trading down here. I'm expecting that it's very likely to be attracted back into that 1800 area if it doesn't open and initiate a sell-off with the gap lower. So let's take a look at the Russell a little bit more closely. Pretty active product, but it's been just really stuck in where it is. So here's the Russell, pretty big selling on pretty decent volume in the Russell, and that makes sense given the information from First Republic or whatever. That makes sense. I mean, the Russell's been suffering a lot by its financial weighting, and it's in the index of 2,000 stocks. But what's interesting is it's sold off quite a bit, but the delta is still positive. And so what this is saying is as it's selling off, it's not hitting the bid as much as the offer is lifting. But if the offer is lifting, it's got to be lifting against limit orders that are moving down the book. So we see price moving down and the delta moving up. So they're passively offering and aggressively buying, causing the delta to be positive while price is falling. Overall, it's just, you catch the gist of what I'm saying here. Overall, this is a good time to be patient and just wait for things to kind of resolve themselves. It may take a while, and it is taking a while, but overall, just exercise discipline and wait for the market to do what it's got to do. So this is what we have here in the S&P. The S&P is really holding below. Where's my VWAP? VWAP. Well, it's not hidden, so I've lost my VWAP here. The ES and Q both holding their VWAPs overnight. VWAPs 41.42 currently, right in here. Pretty swift rejection of the 41.30 back into the 35 area. We're holding steady. The expectation is this is likely to move back up towards its 41.59 to 41.61 settle. That's all I have for you. I know it's not exciting. I don't have anything interesting to say really other than just chill, be patient. This is our delta based on MBO data. You can see they've been selling across the board in the ES and with price, but overall I expect this to rebalance. I expect buyers to come in and take this back up on the open. If they don't, that'll create an interesting opportunity, but overall not seeing this thing staying down here. The Nasdaq's already making its way back above the positive line. Crude is not participating from that side, but look at the Russell. The Russell, despite its sizable sell-off, is actually positive in delta currently, with all three sizes being positive to neutral. The Russell is very likely to kind of walk itself back up as soon as it finds an opportunity to push higher. So that's it. Any questions? I want to remind you that tomorrow there's a show at 12 o'clock Eastern with Futures Radio Show talking about how traders are using zero DTE options to trade futures, to look at where option walls, gamma walls, and so on are setting up in the options, in the underlying options, and converting that into futures trading. To get information about that, to watch the show tomorrow, 12 o'clock, and also to participate in the giveaway of these Bose headsets, please go to edgeclear.com/deli. edgeclear.com/deli. Take care.
They do expect pricing to be flat for the full year, giving back the Q1 gains, therefore GM